Hello, everybody. Oh, I don't know if I need to move this. Oh, can you guys hear me okay? I hope you can hear me okay. Happy Sunday to everybody. We're talking about some dark subject matter today. We're going to be talking about the dark underbelly of the real estate world. The housing market has things that happen, and it doesn't like make national news at all. You know, like there's always all these things that we as real estate agents know about, but you as a public may not see it on your news feed, in you know, even on TikTok or Facebook. It just isn't that important to the unprecedented events that we always see every single day. You know, it gets buried. So today we're going to be talking about like all the things that can go wrong, especially when you're purchasing or selling your house. We're going to be talking about the dark underbelly of the housing market. But before we get into that, we're going to be talking first about what has been happening in mortgages. And if you have any mortgage questions, I suggest you pull them up right away, because we have a very special guest. His name is Kyle Seagraves. He's with the channel Win the House You Love. Yes, he's with Win the House You Love, but we have him for a very short period of time. So if you have any real estate mortgage questions, this is your time to do it. So we're going to start off right away talking about an article. I know that you guys on TikTok can't see this article, but I'm going to read it, the highlights of this article. And, you know, don't expect Kyle to give any footnotes on this, because he is in the industry and I don't want to get him in trouble. So, Eddie, can you give me
that's spicy?
Yeah, it's spicy. So okay. It's about D.R. Horton. So let's show that. Eddie, the one about D.R. Horton.
The property tax lawsuit?
That's another one. D.R. Horton has gotten themselves in a lot of trouble. This is specifically about their mortgages. Da, da, da. Here we go. Class action laws over the mortgage disclosures that might change the case for investing in D.R. Horton, or DHI. Have you heard about this?
I haven't. I'm ready for some drama though. And especially that might get me in trouble. What's the hot water?
Oh, I don't know if you're allowed to say certain things. So I didn't want you to say something that you weren't supposed to, or get you in any kind of trouble. All right. A class action lawsuit was filed against D.R. Horton and its mortgage subsidiary in the past week, alleging deceptive home selling and mortgage practices that misled buyers about the true monthly costs by omitting required property taxes. Now, I've heard this a lot, especially in Texas. So, you know, when you're building a brand new home, a lot of times when you're doing your escrow, that first year that you're paying your escrow, you're only paying for the lot itself. You're not paying for the actual structure. So I even heard somebody say, you know, like my payment was $2,138. Then when it was reassessed with the new escrow, now my payment is $3,128. It was an additional $1,000 because of the, you know, reset of the escrow, which is crazy. This legal development raises important questions about potential risks to D.R. Horton's reputation, customer trust, and future business operations if the allegations gain traction. We'll explore how customer trust and legal risk from the lawsuit could influence D.R. Horton's investment and outlook going forward. They're not the only ones who've done this, by the way. I've heard many builders like omit that first year. It's been crazy. I just scrolled down just more, Betty. Why did I call my husband Betty? Scroll down more, Betty.
Get us together, Betty.
Yeah. Go ahead, scroll down even more, please. Below this little.
And I actually can comment on this. I mean, I'm not going to say anything about D.R. Horton necessarily, because I don't know what they do necessarily, but this is a huge issue that happens with new construction. Because with mortgages, you know, Fannie Mae, for instance, so lenders have to underwrite certain guidelines. One of those is like Fannie Mae or Freddie Mac. And so in their guidelines, it says that lenders have to make sure that property taxes, if it's a new construction, so like you mentioned, the property taxes that show in the county are just for the land and not for the building yet because it hasn't been assessed for the property value with the building on the land, that the lender's supposed to give the best judgment for what those property taxes are going to be. And so usually what you can do is you can look at other properties that are in that development to see what estimated taxes would be, because those lenders should be collecting those estimated taxes in escrow. Like it says in the guidelines, they're supposed to estimate what they think it's going to be if the assessed value is only based on the land. And why they're not doing, like, I don't know why they thought they could get away with this. Because not only is this an issue clearly for people who are saying, you know, my property tax or my mortgage payment is going to increase hundreds of dollars per month because of the higher value, but then also they're not following with mortgage guidelines. And so I'm wondering too if there's potential of them getting in trouble with like Fannie Mae and Freddie Mac as well.
Well, there was an interesting question that came up. It says, who cares about reputation? How much money and power do I have? So here's the thing. If you're in a situation where you have purchased a house and it wasn't disclosed to you, you have to go. I know you get a ton of paperwork thrown at you when you're purchasing a house, and then you go even further in the fact that like they keep sending you more stuff, and then you have the builder's contract, then you have the state's contract, and then they give you all this other stuff. And maybe somewhere tucked in all that information, it said how the escrow was going to reset. And a lot of times when these builders have their own in-house lending institutions, are giving you an incentive to purchase. So they'll either lower the interest rate below the market value at currently. They'll offer you some closing costs if you use their title company. So everything is in-house. And so then you feel like you're kind of like up against the rock and a hard place. If that was not disclosed, you have to take all your paperwork, bring it to an attorney and say, hey, look, they never disclosed the fact that my escrows were going to reset after a year. That never was explained to me. Here's all my paperwork. I can't find anything in here about that. Then I'm sure this attorney will take that up right away. So what the repercussions or what the settlement would be for you to get with them, maybe this one, Eddie remembers that we had a lady who was, I think she was nuts, but on top of it, doesn't matter. She felt like she was lied to by the mortgage company and that they didn't explain to her that the mortgage was going to reset with escrows. They bought back her house. So, but it was mostly because she was a pain in the rear end. Like I said, I think she was a little crazy, and sometimes you don't want to fight with crazy. So it worked out for her benefit. But you know, just be aware of that. Wow. Yeah.
Okay, so it was the property tax thing. There wasn't an additional lawsuit.
Nope.
Okay.
Nope. Well, and then she was trying to like, of course, this wasn't D.R. Horton. This was another builder. What she on top of it all, like, because this thing was getting it over her head, right? She was trying to find all these other little things that were wrong with the house. She said there was a problem with the roof. Oh, there's a hairline crack in the driveway. That means that like I said, she was nuts. But she had a legitimate claim about the tax thing. All the other stuff was ridiculous. Yeah. So they just went through, repainted the house, and resold it. There was nothing wrong with the home itself, so they were able to resell it.
Well, for people who are buying new construction, or if you're looking at new construction and don't want to get caught in this, it's really not terribly difficult to make sure that you're not going to run into this issue. Because what you can do is you can just go to the county auditor site and look up homes in that development at a similar price range. And so you can see what those property taxes are, because for most people buying in a new development, most of the time, you're not going to be the first mortgage in that development. There's already been people who have bought there. And if it's been assessed before you buy it, you can see what other people are paying in taxes. That way, if they quote you, okay, it's $100 a month in property taxes, but you looked online and you saw the exact same model or a similar model with a similar price is, they had a value of, maybe they're paying, I don't know, $500 a month in property taxes. Okay, your mortgage lender is going to ask $100 a month from you every single month, but you can save that $400 a month on your own. So when they come to you and say, hey, we underestimated taxes, you now owe us, or you're going to have to pay this tax bill for several $1,000s. Hopefully you have that money sitting in a savings account. I feel like what's really disappointing is that, lenders should be there to help people not feel like they have to be a loan officer or a realtor to be able to buy a house. But
Mhm.
unfortunately, it seems like a lot of lenders kind of maybe take advantage of people just not knowing or just being
Yeah, the
overwhelming. Or like you
ignorance of
mentioned,
people.
I don't even know if it's like ignorance necessarily. It's just a huge complicated thing. And like you were saying, you're getting hundreds of
Bombarded.
documents thrown at you, and
Mhm.
you're trying to make the best decision. And the expert you're working with is saying it's only going to cost $100 a month in taxes. Why would you not believe them? So it is unfortunate that that's how it's set up. But you have to do a little bit of legwork to make sure that you're protecting yourself and not going to run into that problem.
Camp and Sasquatch says, yeah, I can imagine she was stressed and going crazier. I can imagine how you could really feel bamboozled. But there were inspectors and due diligence can really, really help in the long run. Yes, I agree. The inspection, everything, there was nothing physically wrong with the house. She was just trying to add on to her frustration. The problem was is that she was not explained why her payment went up so much higher than when she was originally quoted. And people that are financially stressed, and especially in this time when things are going up and up and up, to get this surprise in the mail with escrows is overwhelming. And banks, speaking of things that happen with escrows, I worked with a bank, a well-known bank, that has a little like wagon in their
Who could it be?
Yeah. So I had my mortgage with them, and every time I turned around, they were saying there was my escrow was short, but my property taxes didn't change, and my homeowner's insurance went down. So how is it that I needed to pay more in escrows? That made no sense to me. And so we kept going round and round and round. And then I was like, so I was able to document there was actually an overage in escrows. And they still were saying that I owed them. I was getting all these letters. So I got so frustrated with them that I went ahead and refinanced my house. Just
Hmm.
refinanced it just to get them
Yeah,
off of there.
just
Cause I was
just to
like, I
switch.
will just to get rid of
Well,
them because they were like crazy. The only thing I loved about it was that they had a credit card that you could use, and that, like you get cash back. Well, that cash back that I was getting from my credit card actually went towards the principal of the house. So I was like making payments because of my credit card use. And I put everything on that credit. That's the only thing I loved about that bank. But then they stopped that program too. So it was like, what's the point? Yep.
hmm. Well,
So Charlton says, aren't insurance premiums tied to the value of property taxes?
no, they're not tied. Maybe I'm misunderstanding the question. Like, are they tied to property taxes? Because your
It's
tax it, are they talking about maybe like the assessed value of the home?
Well, yeah, he's saying that like the premiums would probably go with the assessed value of the home, but my insurance doesn't go that way. That's not how it works for us.
Yeah, usually insurance isn't just going to go off the assessed value, like the property tax assessed value, because in most areas, your assessed value from the uh, county taxes isn't going to be like the actual value of your home. Like the assessed value of my property is maybe like half the like sale, the actual value of the home. So it's usually going to be the cost to rebuild is what
Hmm.
insurance is going to be primarily based off of.
Yep.
And
Yep.
I will say too, one other issue with the escrow thing is that it's not just let's say you went from $100 a month in taxes to $500 a month in taxes. It's
Right.
that period of time that you lived in that home before it got reassessed. So let's say it was a year, maybe two
Uh-huh.
years, you
Uh-huh.
still have to owe that money. Like it didn't just go away. Like the county
Right.
still wants those taxes. And so I think that's where it becomes really difficult for people is not only do you have to pay the new higher monthly payment, but you either have to make a lump sum of all the taxes that you owe that you didn't pay yet, or that's broken into a monthly plan as well. So you're not just paying an increase of $400 a month in taxes. It's the $400 a month plus a monthly plan to get you current on the taxes that you owed previously.
Gotcha. Good advice, Eddie. We have another article about another mortgage company that's in trouble. So Clark says, I feel like the builder should not be able to have their own in-house lender, just my opinion, but I understand the free market. I think nothing's more like red flag, in my opinion, and this is just my total opinion. You guys figure it out on your own. But when the builder has their own lending, they have their own title company, they have their own home warranty, everything's just tied into that builder. Who do you go to when things go awry, right? When things go awry, you have everything tied in with that specific builder. And to me, that makes me uncomfortable. I know like the upfront cost seems like, oh, well, I'm saving so much money because they're giving me a 4.9% interest rate, but you may not be saving anything because of the way that they broke down that mortgage altogether. Somehow, some way they're getting their money. And just be very careful. Eddie, there was another thing about mortgages. I wanted the thing about mortgages, not about I had articles about mortgage. There was one about Clayton Homes. So they have their
Come
own.
on,
And
Betty.
Cross Country is another one, another mortgage company that has got themselves in trouble. All right, here it is. Scroll down. Cross Country accused of kickback scheme to trigger leads bills clear leads bill clears Congress. So did you hear about this?
The trigger lead bill, yeah.
Yeah. So what? So
massive.
for the people that don't know, what is the trigger lead bill?
Yeah, unfortunately, what used to happen is when you get your credit pulled for a mortgage, there was no control that the lender had, and what would happen is a bunch of lenders, they can buy your data. So Equifax, Experian, TransUnion, they would sell your data when you get a credit pull. So then what would happen is you'd apply for a mortgage with one person, and then some people are getting like 70 calls a day. A bunch of mortgage lenders just saying, hey, you applied, work with us, just that really intense sales calls. And so now that's been cut. So the only people who can call you and get notified when you do get your credit pulled for a mortgage are your current servicer. So if you have a mortgage currently, whoever has that mortgage, they are allowed to be notified. And then I'm trying to remember exactly what the timeline on it is, but it was like the previous loan officer that you'd worked with in the past if you closed a deal with them. Other than that, you can't have a bunch of random people calling you. And it was just so frustrating because especially as like a loan officer, people would, reach out to us. They trust us to be,
Right.
to keep their data secure. But then when you apply with us and then you get calls from 50 other people, they look to us and say, why did you sell my information? And it was really frustrating for loan officers because like there's nothing we can do. We didn't sell your information. We don't want a bunch of other lenders calling you. So thankfully this bill is eliminating all of those effectively spam calls, reaching out to people applying for a mortgage.
Well, so in this article, it says North Carolina brokerage is in an alleged kickback scheme disguised as a co-marketing agreement. The lawsuit claims that the lender paid Raleigh Realty $15,000 a month between 2021 and 2022 for exchange for exclusive leads. The complaint included screenshots of purported text messages by the brokerage president to agents to stop, urging them to stop referring clients to other lenders. That's a big giant no. Eddie, if you could scroll down a little bit. Was there more to that article? I hope. I think the computer's getting stuck. The thing is that here it is. Frank Casey, the acting Federal Housing Association commissioner, has apparently been nominated for a full-time basis for the Mortgage Bankers Association to put out a statement to support Cassidy's appointment. His current title is the HUD principal. Oh, that has nothing to do with what we're talking about. Anyways, it isn't just that the cross country. It's all the lenders. A lot of them were doing this, selling the data, and it wasn't just they were selling them to other lenders, because you would get these phone calls from alarm companies and home warranty companies. Like, who's selling all this stuff? And the only thing you did was apply for a mortgage.
And just to clarify, I'm not aware of any lender that you said cross country was selling. I think you were mentioning. I think you might have got those switched with the article. It's Experian, Equifax, and TransUnion that were selling that data. I'm not aware of any lenders that were selling data like that.
According to that article, it was Cross Country that's in trouble in North Carolina for selling them for $15,000. $15,000.
I think that was for like exclusive leads, not necessarily selling the credit pull information.
Oh, so there's two things going on there. See, this is what I'm talking about. There's so much like scams when it comes to real estate that we don't even know, and all the stories end up rolling over on one another because they're all trying to get in your pocket. That's what I'm getting at. No matter where you turn.
I'm just trying to keep us from a lawsuit.
Well, yeah, no, I
country
appreciate
coming
it.
after us.
Yeah, no, but it says it right on the thing though. They were in trouble for it.
Wait,
I just read what it said. I just read what the article said. I didn't make it up. So
I think.
Let me pull it up. Eddie.
Yeah.
Seems to be. I can't. Cross country mortgage in North Carolina, brokerage for alleged kickback scheme.
So this is where it would be more of like okay, who was it? Cross country and then Raleigh Realty. So this is what it sounds like they're alleging happened is that Raleigh Realty Cross Country Mortgage basically shook hands and said, have all your real estate agents only refer business to Cross Country Mortgage. Don't refer them to any other lender. And so they were steering their clients only to this one lender, and Cross Country allegedly was paying $15,000 a month for Raleigh Realty to do this. And so it wasn't that they were selling trouble.
I would have been fired from Raleigh Realty because no one's going to tell me that I have to use a specific lender or I can't tell my clients to use the best lenders that I know of. That's absolutely ridiculous.
Yeah. So it's what they're alleging is that effectively the Raleigh Realty and their agents were only recommending one lender, which in of itself isn't wrong. It's just when it comes in exchange with money of saying you can only use this lender, but you're getting paid on the back end for that, is where that becomes a big issue. It's not a problem for a real estate agent to say like, hey, I love this loan officer. Here's their contact information. That's not a problem, but it's just when there's money exchange on the back end, that's like kickback, and it's like super illegal.
It's super illegal. You can't get any money because you recommended a lender. But that's why I always give the name of three. And I've worked with the same three for the last 20 years. So it's like they're who I work with. I like them. They're good. They do my loans on my house. So all right, now we got another one, Eddie. If you pull up the one about it's either Clayton Homes or it says Warren Buffett, something like that, about their mortgages.
Oh, so many bad people. What's going on?
That's what I don't know if you saw the name of this stream. It's called the dark underbelly of real estate. So I wanted to show everybody the things that we don't talk about. We'll highlight like a little thing here and there, but unless it like makes major news, most people don't hear about it. So.
And after the stream, I'll be doing the dark underbelly of my kitty cats.
Oh, they're poops. You're cleaning poops.
The relentless peeing that I can't get to stop.
Yeah. Have you checked their kidneys?
No, that's something that I should do though.
Yeah, you take them to the vet. All right. The CFPB sues Vanderbilt for selling borrowers up to fail. It set borrowers up to fail for manufactured home loans. So I know the whole story on this. I've read this several times. So Berkshire Hathaway, that owns Clayton Homes, that also is affiliated with Vanderbilt Mortgages, they were approving people for loans to get into manufactured homes that had no business. Like they were doing their debt to income ratio where the person was left after they made their house payment with like $16. It was crazy, and they'd still allow it. And of course, these things end up foreclosing, but they didn't have a problem with it. So in Washington, D.C. today, the Customer Financial Protections Bureau sued Vanderbilt Mortgage for setting families up to fail when they borrowed money to buy a manufactured home. CFPB alleges that Vanderbilt business model ignored clear and obvious red flags that borrowers could not afford these loans. As a result, many families found themselves struggling to make payments and meet basic life necessities. Vanderbilt charged many borrowers additional fees and penalties when their loans became delinquent, and some eventually lost their homes. The CFPB is seeking to stop Vanderbilt's illegal practices and obtain relief in harmed owners. Vanderbilt knowingly traps people into risky loans in order to close the deal on selling a manufactured home. The CFPB lawsuit seeks to not only protect home buyers, but also honest lenders helping people to finance the purchase of an affordable home. Vanderbilt Mortgage Finance is a non-bank financial company based in Prairieville, Tennessee, that originates loans for manufactured homes across the country. Vanderbilt is also a unit of Clayton Homes, which is the biggest manufactured home builder in the United States, which is the largest manufactured home builder in the United States, and a wholly owned subsidiary of Berkshire Hathaway, a multinational conglomerate based in Omaha, Nebraska. So whenever you go in and you're looking at manufactured homes, some people call them mobile homes. One of the biggest names you'll see is Clayton Homes. And they don't want you, they always try to push you into their finance office. So there's a finance office right there on the lot when you're going to look at these brand new manufactured homes. They kind of make it seem like, make you feel like this is the only place that you can get a lender for these homes. So they're like, oh, you really like this home? Oh, we can get you approved right here. Why don't you go over here and we'll get you approved to get into this house? So they think that's the only option that they have. Then these lenders will, put up all these numbers and they'll promise all these things. Of course, none of it's in writing. A lot of these people, this is the first home they've ever bought. And because they don't have the same protections as you do with a traditional built home, they get away with a whole hell of a lot more because they're not representing themselves as real estate agents. They're just salesmen. So they can do and say a lot of things that whatever they want. And a lot of the loans are chattel loans, meaning that they're not attached to land. So those regulations are completely different too. So in some cases, some people could have gotten a traditional fixed 30-year fixed rate mortgage, but they put them in a chattel loan, which is a higher interest rate over a shorter period of time. So Vanderbilt can make more money.
Not only that, which what red flags did they ignore that told them that people couldn't afford those homes?
Well, they would do the debt to income, the DTI, the debt to income, knowing that they didn't have enough money. And then, like I said, when they would be done, it would show up that the woman only had $27 left after she made all of her house payments and all of her other bills on top of it. But they went ahead and approved it anyways, and she got a house. So then they go through the whole foreclosure process.
What do you recommend for, because like this is not a new problem. Like this has been happening in real estate for a long time, where it's kind of this push and pull of people are like, I want lenders to have less regulation and I don't want them to tell me what to do. And then other people are like, lenders should look into people's entire budgets to figure out exactly what they can afford. And it's kind of this balance of regulation versus how much responsibility the lender has for someone's mortgage payment. And so what do you, like when you advise people on like affordability, so figuring out how much of a mortgage payment they should take on, how are you recommending what that's going to be like in their budget? Because lenders, as we've seen, are not financial advisors. Like they're not looking out for your budget. They're only trying to look at the risk of you paying back a loan.
Right. And the thing is that I don't think people, once they don't even know what their debt to income ratio is. So I think some education on that afterwards needs to be explained. That girl had no idea that when she got done, that all she would have left is $26. A lot of people are financially illiterate. If I'm going to be frank with you, they just make it every month. So they're just like, okay, I'm just making it. So I'm paying my bills. I'm paying $700 in rent right now. So I think I can afford an $800 or $900 payment for a house. I think I'll be fine. But they don't realize they don't have that money because of all the things they have to purchase. And, you have to have a little bit of money for emergency because things happen all the time. My car just broke. I have a cheap car, like a $2,000 car that I bought, right? And out of nowhere, it just stopped working. You have to have a budget for that. And no one explains that to you. And I think that, I think it's the responsibility of the lender to tell them, look, you probably can't afford this because once we did your debt to income ratio, it looks like you only have $16 left to live. That's not enough money for someone to live.
Yeah, it is. It is tough.
especially in affordable housing like that, because that is the most affordable home you can buy. And they know that they know their audience. They know who's coming in to buy those houses for the most part. And they work against them. They have been in trouble for predatory lending practices over and over and over again. It isn't just Vanderbilt, but Clayton Homes has gotten in trouble for it. And they have deeper pockets to fight against people that don't. So a lot of times, a lot of this stuff is brushed under the carpet because you're trying to afford a manufactured mobile home. That's what you're trying to do. You're trying to afford that. These people have lied to you about getting a mortgage with them. How are you going to fight against that? Who's going to help them? They're in a bad situation. You can't, they don't have deep enough pockets to go after Warren Buffett. Are you kidding me?
Yeah.
So I'm glad that the CFPB is going after them. I'm glad that they're addressing it because predatory lending practices for that company have been going on for decades. I don't know if anything's going to happen, but Charlton Zimmerman says, go ahead.
I will say, especially in like the mobile home world. It's just like, it seems like everywhere people are trying to get you in some way.
Well, it's not. It's just the mobile home world, the tiny home world, outside financing, creative financing to get into affordable housing. There's so many scam artists because they know they're not going to get in trouble like they would if they were trying to sell a traditional home. It's not the same. It's just not the same. So they, I don't know how many tiny home builders have gone belly up after they stole tens of thousands of dollars from people, giving their last bit of money to find the most affordable housing option. And then they just go off to Las Vegas or they just disappear and nothing ever happens to them. There's this guy, he ran a tiny home company called Holy Ground Tiny Homes, right? And he kept collecting. He went viral during the pandemic and he was collecting people's deposits. Some people were said that because they said to him, I really need this house. And he said, well, if you pay me the full amount now, I will rush your order and you will get your house, you'll get your house right away. So they're sending them $35,000. And he did that to everybody down the line. And he just scammed them out of the money. They never got their house. And he's just walking around. He ended up starting another business, started going by his middle name and started making saunas in people's backyard, starting the scheme all over again. Like dry saunas in their backyard.
Sauna? Okay.
Yeah, it was a backyard sauna workroom. So they didn't have bathrooms or anything. And he just went down somewhere else in Colorado, started that whole business going by his little middle name.
Just a shed with a fire pit in the middle.
All over again. Liar, pants on fire.
Oh, wait.
What?
I would say Peter said, geez, Kristina, he's a lender. He's not going to want to come back on your show. Yeah, I'm never coming back. No, I like to call it bad lending too. My most recent video is how bad loan officers trick you. Like you can run a business, but you can be a loan officer and do it in an ethical way. Like you don't have to be scamming people and tricking people, and it makes it bad for everybody. And so I have no problem with talking about lenders, loan officers that are behaving badly. Because we don't want that.
Holes. They're being poopy holes.
Yeah.
Charlton says, question, do people today understand chattel loans? I don't think they do. The majority of people, they just hear mortgage, or I always hear how, like here in the South, they'll say house note. To them, it's all the same thing. They don't realize that a chattel loan is going to be a higher interest rate. They do not realize that it's over a shorter period of time. They do not realize that it's going to be very, very almost impossible to refinance if you have a chattel loan. And for those of you who don't know what a chattel loan is, it's just you're paying the price for the mobile home itself or the manufactured house itself, but you're not paying for, in that house note, there is no payment for the land. It's just for the house. So if you default on the mortgage, they're only repossessing the manufactured house, not the land. The land will still be in your name if it's owned by you. There's pluses and minuses to all of that. You have to weigh out your options. Some people choose to do that because it's family land and they don't want to, if they don't pay it, they don't want the whole thing to be sold off and auctioned off. So some people choose to do that, but other people don't realize that there is an option. If they rolled everything in together, that they get a 30-year fixed rate VA, FHA, they could have gotten a cheaper loan and more financial help with that too over a longer period of time. So they could have, had more money in their pocket, but that wasn't explained to them by the salesman in the office who was playing lender, Anyway.
My cat's trying to show her butthole on screen and I can't do that.
We call it the crunchy starfish. That's what we call it at our house.
She has a subscription for that you have to pay for.
Yes, it's her only meows fan.
Only meows. That's a
Mona says question
start a new
for
business.
Refinancing. She wants to know, would it be better to go with a current lender for better terms, or does that not matter?
Really, it doesn't matter all that much. Your current lender is likely going to offer you a great deal because they want you to stick with them. They don't want to lose your business. However, it's going to be good to get multiple opinions. So I think a lot of people feel like they just have to stay with their current lender. I would suggest asking your current lender what they can offer, and then also talking with other lenders and seeing what's there. Because ultimately, right now, people really want your business. And so I would say reach out to several people, look at the quotes, and see what's best for you. But it's not always that your current lender is going to be the best offer.
Rick made a good comment. He said, good, they're taking care of, like sarcastically, he's like, great, they're taking advantage of the poor. That's exactly right. Yep. That's what they always do. And they've been doing it for decades. And then how when you have no money anyways, how are you going to fight back with a mega corporation like that? It takes a lot of people like screaming in order for it to get any kind of traction.
I do wish like mortgage lenders or anybody in sales and real estate wasn't viewed as someone who's going to help you with like your whole budget. Because I say that in every video when I talk about affordability and how much your mortgage should be. I'm always saying like lenders are not your financial advisor. It really is like it's your responsibility for coming up with choosing a mortgage payment that works for you and making sure that you don't overextend yourself. Unfortunately, a lot of people just don't do that. They there's so much like what's the word I'm looking for? Like kind of like lifestyle creep or inflation. I feel like when people are shopping for homes, where it's like, okay, we want to stick around this number, and then they kind of bump up their price a little bit, and then all of it's I needed that extra bathroom, and now all of a sudden, I don't really have a hard limit on my budget anymore, and then people start to overextend themselves. But like, ultimately, you're the one. Oh yeah.
I get what you're saying, like, but what if we did something like this, right? Because a lot of times it's people, they're buying their first home and they don't understand what's going on with their finances. They don't understand what it takes to own a home. They don't understand these things. Nobody teaches it. It's not part of school, right? So what if you did a first-time home buyer incentive loan where you actually had to take a 1-week course after work where you are basically given a little schooling on what it means to be a homeowner and what you're going to have to pay for and what your budget should be, where you're given worksheets and workbooks and everything else. So once you finish and you get your little certificate, now you get 1.5% off your mortgage, or a full percentage off your mortgage, some government mortgage, because you pass that thing. So you have some literacy on what you're getting yourself into.
That's basically what a NACA loan is.
Yeah, well, not a lot of people do those. They don't know about them. They're not advertised.
Yeah, but I mean, that's effectively what they do. It's a pretty long process because they go through credit and budgeting and planning, all of that. And then you get a really great mortgage, but it does take a long time to get through. And I think there's also a community service element. Don't quote me on that, but I've heard like there are some pretty intense requirements that are, it's certainly not just like walk in and let me take a course and you'll give me a better rate. But yeah, I mean, I do wish that existed more. But I wish more people knew that like they need to be in control of their finances and not a lender or the salesperson telling them what they should be able to afford.
Some people need to be told some things though. Some people need to be given a little, like they didn't really get the parent that told them things, So
I think what's hard too, what's hard from like a lending perspective is, okay, so like if there were laws that tightened up the debt to income ratio a little bit more, for instance,
Mhm.
Did I lose you? You turned into Family Guy character.
Yeah, just for a second. I was trying to flip the script.
The hard part is like, okay, for example, let's say there's a couple looking to buy a house, but only one of them is going to be on the mortgage. So they might have a debt to income ratio that maybe is like 45%, 50%. And so on its own, you look at that and be like, there's no way that, like, this is a terrible decision. And so is it right for me to say to someone who I don't know, I'm not in their finances day to day, you can't buy this house because of this number? When I know that from a holistic perspective, their spouse makes twice as much as they do. Their debt to income ratio as a total is actually, let's say, 25%. So it just becomes difficult when I think we get effectively the government regulating mortgages and what payments should be. Because then it does start to cut into people's ability. And so I think there's a balance, I think, between the two that would be best.
Right. But like right now they're talking about deregulating Freddie and Fannie, right? So like they went under a
What isn't being
conservatorship.
deregulated at this point?
Yeah, well, the whole thing is that they went under a conservatorship, like, you know, Britney Spears style, right? So they were like, "Ooh, you guys are going too crazy," because after the 2008 crisis, they were doing all these kooky loans, interest only loans, stated income loans, and anybody and everybody, you could have a pay stub and a phone bill and get yourself a house that was way above your threshold of purchasing. And a lot of people were playing like you know, gambling with housing, because they were like, oh, I'll just hold on to it for 3 months and I'll just sell it and get $10,000 or $30,000 from it, blah blah blah. That's what people were doing. So then, you know, the government said, okay, look, we're going to, you know, you're obviously too big to fail. We're not going to let our economy go to crap. We're going to pay you guys to, you know, straighten out everything. But in the meantime, we are now your babysitters and we're not going to allow for certain things. So there was a bunch of regulations that happened. They are now looking to lift that, right? No more regulations. We're going to let you go crazy and do your whatever you want. You're going to now be privatized and you're going to have no oversight of your lending institution. I think there's a place for regulation. And I think we haven't gotten ourselves, because this could have gone even worse if we didn't have that oversight during the pandemic when so many people were buying houses. If we loosen that up, and this is my personal opinion, I think where it's a recipe for disaster to allow for more kooky loans to start all over again.
Oh, absolutely.
That's just my personal opinion. I think it's a very, very, very foolish, stupid idea. You know, the fact that we gave them all of our tax money to get themselves out of hot water. And the deal was, okay, we'll get you out of the water, but we're going to keep an eye on you from here on out. I think that was a good trade-off. And to say, well, now that you've been a good boy, we're going to go ahead and take all these regulations off and you can do whatever you want. I think that's very foolish.
Yeah. Yeah. Absolutely.
You agree?
Oh, yeah.
Some lenders do not agree with me. They're like, oh no, you shouldn't have the government telling you how to run your company. And I'm like, we didn't. You saw what happened. There was repercussions for that. I don't know. Clark has a question. Clark, the realtor, he's out of Atlanta. He says, why are conventional loans typically not assumable? Why aren't they?
I don't know any conventional loans that are assumable. It's really just, it's more so that it's not the default. It's just a protection that was added into government-backed loans like FHA, VA, sometimes USDA. So it's just not a profitable thing, frankly, which is, you know, conventional loans are mainly something that's done, or it's tend to be thought kind of more on a private market rather than like managed by the government, like FHA, VA, USDA. And so since it's backed by the government, they can kind of offer that feature, I guess. Whereas in, you know, for conventional loans, why do it? It's not profitable for lenders. And so there's not really a lot of advantage to making it assumable.
Well, can't the customer have an advantage at some point? Like, I know that corporations need to make money, but can't we get a little bit of handout, a little bit of slack?
That would be nice.
Yeah, that would be nice. All right. So, while we're still talking about the dark underbelly of real estate, I think we need to just address this. It's been spoken about several times. We're going to get to that in just a second. We're going to go with Charlton's question real quick. It says, with the federal government shutdown, won't VA, FHA, and HUD loans stop? Won't real estate builds and sales fall? No. The last time I remember we had, I think the shutdown was 35 days. Loans were still closing. Did you have a problem closing?
No. Everything is, for most people, is not going to be a problem. The big issues you're going to see are people in flood zones. Getting flood insurance through the government is not going to be possible at the moment. Yes, go ahead.
Oh, because I was just thinking, I do remember, and I'll take that back, because RD has to go through their own underwriting process.
Yes.
So RD underwriting process was paused during that time.
Yes.
But all the other loans were still closing.
Yeah, all VA perfectly fine, FHA no problem. It's USDA, like you mentioned, that's going to be the issue, and it's not even that. The thing is, your whole loan can be underwritten because FHA, VA, USDA, they're not the ones actually doing work on your loan. Your lender is, and they're basically like licensed to buy FHA, VA, USDA. The only thing is USDA has this one extra step that they call a conditional commitment, where the lender underwrites your entire loan like normal, and normally with every other loan, your loan closes and it's done. With USDA, there's one review where actually someone from USDA has to look at the loan to approve it, and that's what's paused. So other than that, obviously people who are like furloughed, they're going to have to pause closing on a loan until they're able to figure out their income or where their income is going to be later. But other than that, most people aren't going to have any issues with the government shutdown.
Okay, so say somebody was purchasing a loan with the government shutdown, and because they're not getting paid at this time, does that mean that their whole home purchase is done?
Until their income resumes, yes.
Okay, that's what I was wondering. That sucks. That's terrible. Okay, so Eddie, go ahead and bring up that article about wiring fraud. I'm sure you've heard about this, but it keeps coming up. So if you guys don't know, a lot of people, when they're buying one house, they have their house, another house to sell. And so they wire the funds from the original house. That's a home warranty. This is about wiring funds, please. The home warranty, not the home warranty, the funds are wired to the title company. And so you get these emails, and your title company gets a hold of you and says, hey, look, I know that you're supposed to close tomorrow at 9 a.m. There has been a discrepancy in the funds being wired. We need you to wire to this account before tomorrow at 9 a.m. And so they give you all new wiring instructions, and it looks like a very official email. It even has the same closing attorneys' names, and everything looks the same. But they'll change something in the email address just by one letter. So it makes it look very official. Well, then you go to the closing, and that you put that money that you just sold your house, like you just earned $100,000, and you're going to bridge that into your new purchase, and it's not there because you ended up wiring that $100,000 that you got from your sale to somebody in who knows where, who knows where it went. It's gone. Sometimes they can retrieve it back if it's early enough. A lot of times they can't, and that $100,000 is gone, disappeared forever, done. So one way you can not have this happen, if you happen to live in the same area, ask for the check, ask for the funds at the table. You can get a check from the title company, so you don't have to deal with this kind of wiring scam. What's another thing you were about to say, Kyle?
I was gonna say, if you're transferring money, what's going to happen most of the time is your loan officer is going to send you the wiring instructions for how to transfer that money. And where things get mixed up is in those wiring instructions, your lender's email can be spoofed, or maybe they can hack into your lender's email, or sometimes even they'll be like, oh, they're impersonating your realtor. What you can do to just avoid all of it is your lender's going to send that to you. But if you have if you're closing locally, which most people are, they have like a local settlement company or a local title company that they're working with. Just walk in, just walk into the title company. Hey, I got these wiring instructions from my loan officer. I want to double check these with you. Can you make sure that this looks right? You're about to send a lot of money over the internet. Take the 30 minutes, hour, however long it takes you to go in and do that. If you can't show up in person, just call them on the phone, not through a phone number that you got from anyone else but Google. So you're looking online, making sure you actually found their listing. It matches the website. You're not getting a phone number that was sent over an email. You're not getting the phone number sent to you from the loan officer. You're doing your own separate research, because what a lot of people will do is they can switch the phone number on the email. So you call and then someone says, yeah, that looks good. You should verify those phone numbers on your own. Or like I mentioned, just show up and say, hey, I got these wire instructions. Can you just, for my peace of mind, make sure that this is correct and matches with it? And they deal with this all the time. They do not want you to get scammed out of your money. So it's not going to be a hassle for them to do that for you.
Well, we had it something really crazy here is this scammer actually even spoofed the title company's phone number. So whenever their cell phone was ringing, it said blank, blank, ABC title company on there. And then they were talking to him on the phone, like, you should have just received an email from us with a change of the wiring instructions. We wanted to check with you to see if you received that email before your closing today at 3:00. They're so clever. They hack these people's emails and wait for closings to come across. And then they attack when they know that the closing's getting closer and closer. They've been watching that whole time. So, they were in the right mind, though, to go, you know what? Let me go up to the title company. Just like you said, they drove up there, knocked on the door, and they were like, we never called. This is not a thing. And they were like, I'm so glad, like they could have lost, over $200,000. That's a lot of money.
And that's a great point with any financial transaction that's happening over the phone or any information. It's the same thing with your bank. If you get a call and they're like, this is the fraud department, blah, blah, blah. You can say, great, I'm going to call back, hang up, and then call the number that's either on your credit card or you verified online. Like they can't spoof a number of you're dialing out, but they can spoof it coming to you.
So many scams.
That's a great point. Okay, Kristina, I can answer this one question and then
I know you got it. You were here much longer than I thought you were going to be able to. I'm so glad that you were. Originally, he said 20 minutes, so I'm glad that we got Kyle as long as we did. So Anna says, "Do you understand the financial advisors are not free? They do cost money to hire. The people who need education don't exactly have extra money." No, I understand that. I also know that some of these lending institutions, the biggest ones, have been earning a lot of money off the backs of people that have created those loans that they've been paying for the last 30, 40 years. It would behoove them to not have home buyers that are going to default on their mortgage. So I think, they can pay for it. Absolutely.
Well, she said for not Kristina.
Wow.
So someone also called me Ryan too. So
whatever, you look kind of like a Ryan.
I get Ryan a lot, and I don't know. Maybe
what's your answer to that, Kyle?
Oh, I'll go with both. Because I think she's referring to when I mentioned it's not necessarily the lender should be doing that. I don't think you need a financial advisor, and that's not what I'm saying. Like, you don't need a financial advisor to say like that's way too much of a mortgage payment for me. In the example that we saw in the article, like write out your budget with pencil and paper and see like what am I spending every month, what money is coming in. If a mortgage payment is going to only leave me with $27, you don't need a financial advisor to say like, oh, it's probably not going to be great for me. I don't have a lot of wiggle room here. So I think doing that, and then also YouTube is amazing at searching home budgeting. Watch a couple of videos and you're going to see a lot of really great info about how you should budget, what things you should consider. There's also tons of free or low cost budgeting apps that can help you do all that digitally if you want to, if you don't want to do the work. Like, so many solutions that really isn't an hour of your time to make sure that you're not making a financial mistake. I think is well spent.
I hate those apps. Like, I used to love apps because I'm like, oh, they're so great, but all they're doing is collecting your data. And then they sell that data. So now they know, like, this app, this weird, budgeting app now knows how much you spend, where you're spending it, how much you're spending in each thing, where they could sell your data to get you squeeze that last $16 you have in your wallet from you. You know what I'm saying? Like, all those apps are some way to spy on you to get more money out of you.
Yeah.
So do it by hand.
use a Google sheet. You do it by hand.
Yeah.
Debbie, also, it's okay. I'm not upset that you called me Ryan. It's perfectly okay.
Oh. Well, there is another lender I have on here occasionally. His name's Ryan LaRussa, and he sounds exactly like
maybe.
Matthew McConaughey.
Maybe that's
Like
why.
when he's talking, he's like, "All right, everybody, hey there, Smallhorn." That's how he talks. I should have him on here, Kyle. You would like him. He's a cool dude. He's a cool dude. He knows a lot about lending, so
And
maybe that's where they got
if I
the
can
name.
practice my Southern accent with him too, I'd love to.
Yeah, he sounds just like him. Yeah, Eddie's going to show something real quick. Look, it's thinking. You can see the little spinning wheel of death right there. It's thinking. I wonder what happened.
Oh,
I like the little. It's kind of trippy. Maybe it's an article.
Yes,
Somebody
Matthew
asked, "Can we get Matthew McConaughey? You want Ryan?" Yeah.
Is
So
he going to be
Eddie's
the guest next week?
Yeah, Eddie's giving you an out right now. So if you guys like what Ryan/Kyle had to say this week,
I'll go
you
by
can go
either.
visit him on his channel. He's got tons of information on YouTube. It's Win the House You Love with Kyle Seagraves. You can go over there, and he will answer your real estate mortgage questions. Because all the time I always say I don't know the answer. We got to get a good mortgage guy on here to answer that. So
Well,
Kyle,
mortgages are your favorite questions.
yeah, because I don't answer them. So, Kyle, thank you again for spending more time than you had available for us today. And I appreciate you giving your insight on the mortgage world and talking about the dark underbelly of real estate. Thank you,
Thank you
friend.
for having me. I hope you see more of the dark underbelly. Bring it to light.
All right, good enough. See ya. Bye.
All right,
Everybody say bye to Kyle. But we're still going to be talking here. We're talking about real estate. If you have any real estate questions now that Kyle has left, you're more than welcome to ask your real estate question. I can answer them. My specialty happens to be affordable housing, like mobile homes, manufactured housing, land, tiny homes, purchasing tiny homes. What else do I? Modular homes. Well, what else do I got? I can't think of anything else. What else do I specialize in? Anyways, Rhonda Holt has a question. It says, "Question: What is the cutoff amount for VA will loan on a home? Like up to? I don't know I really don't know. See, that would have been a Kyle question. Man, Eddie got it in too late. Maybe Eddie can look it up. I really don't know. I know there's there's an amount that all lenders won't give you for a loan, like under amount. So like say you had, let's just say the house was 150,000 and you had 125,000 and that's what you wanted to put down in cash. So you're thinking, "Oh, I'll just get a 30-year fixed rate mortgage on $25,000. That ain't going to happen. Most mortgage companies will not let you I think the lowest amount they'll do is $65,000. I might be wrong about that, but that's what I believe. It's 65,000 is the lowest amount. I've seen as low on other mortgage companies go as low as 50,000.
So the only thing I could find is there wasn't a single VA cutoff amount. Rather, the maximum amount you can borrow for a VA loan without a down payment is tied to your entitlement, county limits, and lender approval. For 2025, the baseline limit for single family home in most U.S. counties was 806,000. But as far as little, it doesn't. I can't find anything.
And that's going to depend on the lender. I'm pretty sure it's 65,000. And maybe for VA it might be 45, but I know for conventional it's 65. So, and even some lenders, they could write it for less than that, but their lending institution will not allow them to.
So we had a couple TikToks and I wanted to hit them up now because I didn't want to interrupt your conversation with Kyle. Something shifted, said 45% seems like it should be an amount, the max amount should be no more than 45%. Your home.
So they were saying on TikTok that the max amount your mortgage payment should be is 45% of your income.
No more than 45%.
No more than 45%. Well, I don't know if you guys know this, but people that are renting, and that's what they're paying right now. Over 45% of their income is going just for housing. So That's really cutting it close. I remember when we were back in my day, they used to say don't be any more than 35% over your income, and that was you pushing it. But now that the home prices and rentals have gotten so expensive, people have to spend 45, almost 50% of their income, monthly income, on a payment for rent or mortgage. It's ridiculous. Because then you add the insurance and all that stuff on top of it, man, you're screwed.
Something shifted, and TikTok also said some companies just figure they make more money being shady, so then it's worth it. And then also stated income was wild.
Stated income was wild. Yep. I saw another one on TikTok that says, what is your opinion is better, manufactured home company, Champion or Clayton? I can't give you my personal opinion because I don't want to get sued, but I will tell you this. When you look up lawsuits, find out between the two companies, which one has had a history of more lawsuits filed against them than the other. It's very simple. And if you go to like the Better Business Bureau for the company, it's pretty obvious who's got a litany of complaints against them in comparison to the other. We might have been talking about that company earlier.
I'm going to go back to the beginning. Dazzling Donna on TikTok said, my daughter just sued Cross Country and won for that very reason.
Wow. See? Yep. See? Good for her. I'm glad that she got that. Charlton says, for Handsome Kyle, are you bonded in your state or just have a business insurance policy? Eddie, you're putting up questions that I can't answer. You're talking about, I can't ask.
I'm
Kyle.
sorry. I'm just putting up the next question.
I know, but I can't answer for Kyle.
Am I now supposed to like view them and
well,
say
at least
no to
give
them?
a little review. It says for Kyle. Do I look like Kyle? I know I'm not nearly as good looking, but you know.
So we got a lot of buy to
next
Kyle.
Question. All right. My USDA loan question shall carry over for another time. It looks like I'm still saving, so it's okay. Okay, Camp and Sasquatch. I love your screen name. All right. FlukeMan22 says, question off topic here. Do you remember you did a video about Boxable in 2020? Yes, I do. Can you do another video about them? I read people get tired of waiting for the casita months and years and refuse. Yeah. Okay. I'm going to give you my heads up. I will have no problem saying this out loud. So back in 2019 was the first time I ever met with the company Boxable. It was just a group of kids that were coming up with a very cool idea to build an affordable home that people could put in their backyard. It was just basically a mock-up model of a tiny home that was very affordable, especially in the California, Arizona, Nevada area. Fast forward, I make that video that I did, the very first one, goes mega super stupid viral. So much so that they had to hire people to come in and start answering the phones. Fast forward again, I do another video where I go back out to their factory and see where they're making these houses. And I talk to these kids and I'm like, wow, this is really exciting. A lot of my subscribers signed up for these houses with the hopes that they would actually get one of these homes. I've had people that have now been waiting since 2019 for this Boxable home. I have seen some Boxables out in the wild, but they've been either investors or government contracts. I've not seen it for a traditional person buying a Boxable. If somebody knows of somebody getting one, I would love to know. The waiting list for a Boxable is, I believe it's like over 100,000 people. Whenever you get those investment emails from them, it says investment at the bottom. It says you can order one. They have 2 factories to build these Boxable homes. Those 2 factories can't build enough homes to, it would take them like 5 years to catch up to how many houses have actually been ordered that's sitting on their books. With that being said, people have put a lot of their own faith and trust that they would get these houses, and they put their own money in it too. They keep filling these government contracts and filling these orders for people that they know. Why aren't you filling them for the people that believed in you in the first place? they've had some troubles. You can look this up. It's well documented on the internet with some investigations as far as financing and where the money's going and who's getting what. The conclusion was they can continue operating. If I'm guessing what I think is trying to happen here, and this is just me, my sole guess, is that they have set up this whole thing, the houses, the idea, the promise, with the anticipation that a bigger builder investor would buy the whole conglomerate, that they weren't actually in the business to try to solve the affordability crisis. They're in the business to make a company that they could sell to somebody else and it would be no longer their problem. That's what I think. I could be 100% wrong, but that's why I won't discuss them anymore, because they don't deliver to the houses, to the people that have been asking for them for nearly 6 years now. So that was the long-winded answer about me and Boxable. So yeah, I really did believe in them. I really did. But if you're looking for a Boxable alternative, right? And then actually you can get one of their houses. And it's a real thing, because I've literally talked to this dude several times. Let me I'm gonna have to move my camera. Sorry, TikTok, I'm gonna have to move you for a second. Because I want to show this screen. Okay. I'm gonna share this screen with you. This company is the real deal, right? Here we go. It's called Chomex, Chomex. They have foldable modular homes. They look very similar to the homes that you would see on Amazon, but they're the real thing. Because I've tried to order, you guys know, I tried to order one of those fold out Amazon houses, and they're all a scam. Speaking of dark underbelly of real estate, all those are a scam, right? Now, Chomex has these homes available, and you can order them, and you can pick out the siding that you want. You can pick out the flooring that you want. And look, the cheapest one they have is $15,000. They're having a sale on a couple of them. Now, the next one up, they have one that's $52,000. They have one for $25,000. They have one for $42,000. They're really there. They're really making them. They do exist. It's not a scam. And you guys are getting the inside sneak peek on it, because I was supposed to go and look at somebody that actually owns one in Texas, but he canceled on me. He canceled on me, so I can't show you. I'm sorry. I'm trying to open this tab. Yeah, so he canceled on me, so there's nothing I can do. So what do you guys think of that company? I know that you guys can't see it on TikTok, but it's Chomex is the company. Chomex. Chomex. How is Clayton Homes as a builder? So now, Natalie, I'm going to let you know right now. I have a video on this channel about Clayton Homes and how this particular subscriber had what happened with his experience on buying a Clayton home. And I would, his story is not different or unusual from anybody else that I've spoken to. And there's a lot of Facebook groups that talk about their experience with Clayton Homes and what they're like, the pattern of problems that they have. So I would suggest going ahead and joining those groups on Facebook about Clayton Homes. I suggest you watching that video that I created where it comes from somebody's mouth, so you don't have to take it, my opinion, hear it from the actual people that are actually living in those homes. So Mark says, Boxable, a maker of affordable modular homes like the 20K baby box, merged with FGMC in 2025 to go public as Boxable, expanding a UAE quarter. 200 plus units ordered recently, but low revenue raised concerns.
So they expanding to the Middle East with 200 plus ordered recently, but low revenue raises concerns. And that was per Gronk.
Oh, okay. Well, here's the other thing about it. They like, if you look at their financials, like it cost them $77,000 or $72,000 to build a Boxable, but they were selling them at that time for just under 50,000. So they were losing money every time they built one. That doesn't sound very sustainable to me. I mean, call me crazy. I don't know. I don't know. I mean, that's up to you if you want to invest in that. So next week, I want to ask you guys' opinion. I'm going to need your advice on what you want to talk about next week, because I'm going to be in Dallas, Texas at a conference for the whole entire week. I was supposed to actually end this conference with a tour of those homes from Chomex, but that guy canceled on me yesterday. He canceled me. He goes, you can't come out. I'm going out of town. I'm like, okay. So,
It wasn't Chomex that canceled.
No. The guy
who
that
owns
lives
the
in
house from Chomex, close
Yeah,
by.
the guy that lives in one. Right. It wasn't the Chomex company. It wasn't them. It was somebody that was living in one of those houses. But I am going out to another tiny home community. You let me know what you guys want to talk about next week, and we will talk about it. But I'm going to be doing the thumbnail from the road. So everybody, don't forget to smash the like button on the way out. And I want you to say thank you to all of our moderators. Thank you so much. If you haven't yet and you want to share this with your friends and family as a podcast, you go to anywhere you listen to podcasts, find Real Estate for Everyone with Kristina Smallhorn. And today's podcast will be on all the podcast distributors. It will be out there tomorrow is what I'm trying to get at. So go ahead. Go ahead and share this with your friends and family. If you're going to do that, make sure you give us a little 5 stars and some thumbs up and a good review. If you want to get a hold of me, I probably will not answer you this week because, like I said, I'm going to be at a conference, but you can still go visit my website at KristinaSmallhorn.com. Fill out the form by clicking one of the pink buttons and let me know what your real estate needs are, and I will contact you at my earliest convenience. The poll results are in, and Debbie Brady says that they think real estate developers are slimy. 4% say no, they're not. 16% say kinda, and 81% said that they think real estate developers are slimy. 4% said no, they're not. 81% of you think real estate developers are slimy. Wow, I thought real estate agents had bad reputation. I think real estate developers have a worse. Who knew? But hey, the numbers don't lie, do they? The numbers don't lie. All right, everybody. I love ya. Meet it. See you next Sunday. So long. Farewell. Evita Zane. Tschüss.